All right, now we're going to talk about additional taxes or employment and self-employment taxes. So first I want to go through what we've already really talked about in earlier chapters in the book and make sure that we're understanding the basic amount of employment taxes. So recall that there's an employee portion and there's an employer portion. So the employee portion is what's withheld from the paychecks. That's 6.2% on the first $132,900 of income. That's called Social Security tax. The Medicare tax is 1.45% on all income, so it's not capped like the 132.9 Social Security is. And then there's an excess amount that's 0.9% on income over a certain threshold. For single taxpayers, the threshold is $200,000. For married filing jointly, it's the combined salary of the spouses, and it's $250,000. So that was something we've already talked about, and we probably already know. For the employer portion, so what your employer is paying on your behalf out of their own pocket. So they're paying the 6.2% of Social Security as well on the first $132,900 of income. They're also paying the 1.45% on all of your wages. They do not have the additional 0.9% on excess income. So employers are not required to pay that additional. If too much Social Security and Medicare is withheld, the government refunds the excess, or the taxpayer has a lower taxes payable. It reduces the tax liability. Employers, however, cannot recover the excess employment taxes paid on employees' behalf. All right, so we're going to see this first example. We have Dawn. Dawn's salary is $180,000. How much does Dawn pay in employment taxes, and how much does her employer pay? So I'm going to do the employee, which I abbreviate EE, and then we'll do the employer in just a minute. For the Social Security portion, we have $180,000 in salary, but Social Security is capped at $132,900. So only $132,900 of her salary is subject to the 6.2% Social Security tax. So that's $8,239.80. For the Medicare portion, all of her income is subject to the 1.45%. That's $2,610. And because her income is lower than the $200,000 threshold, she does not have to pay that additional 0.9% in Medicare. So her total tax here is $10,849.80. We're going to see that the employer pays the exact same amount. So for Social Security, on the first $132,900 in wages, 6.2%. For $8,239.80. For Medicare, on the full 180, 1.45%, $2,610. So we add that up and get the same $10,849.80. Note here that if this taxpayer had been above the $200,000 threshold and was responsible for paying the additional 0.9% tax on excess income, the employer would not match that. They do not have to pay that portion on the excess. So what if the taxpayer changes jobs during the year? We just are going to say that everything starts over. So everything starts over. What I mean by that is each employer is required to withhold Social Security on wages until the employee reaches the $132,900 for that employer. So it's possible that you're over withholding if you have multiple jobs where you're earning more than the $132,900. The employee will get that money back, so the employee can deduct the excess Social Security from their tax liability. They're not going to be on the hook for all of it, but the employer is going to withhold taxes as if that is the taxpayer's only job. All right, now for self-employment taxes. So these are taxes for self-employed taxpayers. The first term that we really need to be comfortable with is net earnings from self-employment. So self-employed taxpayers have to pay both the employer and the employee portion of FICA taxes. So like we saw a second ago, the self-employed taxpayer would have to pay both sets of $10,849. And so to even the playing field a little bit, self-employed taxpayers reduce their income that's subject to self-employment tax by 7.65%. That's the 6.2 plus the 1.45. So that's 7.65%. That means that self-employed taxpayers only subject 92.35%, so it's 100% minus the 7.65. Self-employed taxpayers only subject 92.35% of their income to self-employment taxes. And that's good for the self-employed taxpayer. They would rather subject less of their income to the tax. And again, we get this benefit because the tax law is trying to make it more fair to the self-employed taxpayer. All right, we call this 92.35% the net earnings from self-employment. All right, so that's the 92.35%. All right, so the general calculation of self-employment tax is first you have to calculate net earnings from self-employment, which is right here, then 92.35% of the income. And then the taxpayer pays Social Security, which is 12.4% on $132,900 of net earnings from self-employment. That 12.4% is the 6.2% times 2, because it's the employer and the employee's share. Since they're self-employed, they have both. The Medicare is the same way, 2.9% on all of their net earnings from self-employment. The additional Medicare, the additional 0.9% is calculated on the greater of 0, on the greater of the net earnings from self-employment less the 200, so just the excess over the threshold. This additional tax is considered employee tax. So it is not considered self-employment tax, this additional excess amount. All right, and then we have special rules for when a taxpayer receives both employee compensation and self-employment earnings. So basically what is explained in this paragraph is that the first thing you do is apply your wage earnings to the $132,900 threshold. Then, if you still have some runway there before you get to $132,900, you would apply your self-employment income, your net earnings from self-employment income, I should say, next. And so that's a benefit to the taxpayer because they may reach the threshold of $132,900 and be applying the rate of 6.2%. And they may reach that threshold and then never have to subject any of that income to the 12.4% self-employment Social Security tax. All right, so we may get a benefit there that the taxpayer is going to really like. We're going to say always compute employment taxes first. And that's first before self-employment taxes. I think once we calculate an example of this, it'll be a little bit clearer. All right, and then the next step would be after applying the Social Security tax, the Medicare tax, 2.9% on the net earnings from self-employment. And then lastly, if there was any additional Medicare, we would go through that calculation as we've kind of outlined before. In terms of deductibility, all right, so self-employed taxpayers are allowed to deduct the employer's portion, not all of it, but the employer's portion of self-employment tax. So the self-employment tax deduction is the employer's portion of Social Security. So that's 6.4% on up to $132,900. the employer's portion of Medicare, so 1.45% on the net earnings of self-employment. And for the number 3, I just want to say again that excess Medicare that the taxpayer may be subject to, that 0.9%, is not deductible as self-employment tax. All right, so here's our example. Drew is a self-employed taxpayer and has net earnings of $180,000. How much does he pay in self-employment taxes? The first thing we need to do is calculate his net earnings from self-employment. So it's $180,000 of earnings times the 92.35%. So we're only going to subject $166,230 to the self-employment tax percentages because the net earnings from self-employment, $166,230. That's good for the taxpayer. So to calculate the Social Security portion, we take $166,230. We see that for Social Security, it's capped at $132,900. So not all of the income is going to be subject to Social Security, just the $132,900 times 12.4%. And that gives us $16,479.60. For the Medicare portion, $166,230, there's no cap. So all $166,230 is subject to the 2.9% Medicare. That's $4,820.67. The total, $21,300.27 is the amount of self-employment taxes. What is the deduction that the taxpayer can take? And in this case, in every case, it's the employer's portion. But we're going to see in this case that it's half. So for Social Security, it's the $132,900 times 6.2%, or $8,239.80. For Medicare, all $166,230 times 1.45%, the employer's portion, $2,410.34. The total, $10,650.14. It's not always half because you might have the additional 0.9% that would not be deductible. All right, so note here, this is the employer's portion that is considered deductible. All right, now Drew is employed and earns a salary of $70,000. So we have a salary of $70,000. He also operates a successful lawn care business, which produces net earnings of $60,000. How much does Drew pay in employment and self-employment taxes? What is his self-employment tax deduction? All right, so on the first $132,900, $132,900, taxpayer must pay Social Security, and then on all income, taxpayer must pay the Medicare. All right, so since the employer is legally required to collect employment taxes, we're always going to start there. So for employment, we have the Social Security on $70,000 in wages times 6.2%, $4,340. The Medicare, $70,000, not capped, 1.45%, $1,015. So the total employment tax is the sum of the two, $5,355. The self-employment taxes. We first consider the cap. So our Social Security is only on the first $132,900 of income, we've already paid Social Security on $70,000. So it's just the excess. So the $132,900 minus the $70,000, we still owe Social Security on $62,900. And the taxpayer doesn't even make that much from self-employment, so we're going to be under that. Okay, so just be careful. We're not going to subject all $62,900 because the taxpayer only earns $60,000 from the business. So we need to determine net earnings from self-employment. The $60,000 that the taxpayer earns times 92.35%. So the amount of income subject to self-employment tax is $55,410. Because it's less than what we would have to subject to Social Security, all $55,410 is subject to the 12.4% Social Security tax. And that's $6,870.84. But you can see that the fact that we got to subject $70,000 up here to a lower rate helped us. So we got to do that first. And then only what's left, or up to what's left, can be subject to the 12.4%. Okay, so that was a benefit to the taxpayer to organize it in that way. And then for self-employment Medicare, no cap 55,410 times the 2.9% is $1,606.89. So the total self-employment tax is $8,477.73. Because we're under that $200,000, and let's just check on that over here, the $200,000 threshold, to see if we would make it, we would look at the $70,000 plus the $55,410, and we're under that threshold. So we're under the $200,000. We don't owe that additional 0.9%. All right, and then I'm going to switch colors here to talk about the deduction. So the deduction for self-employment tax, and this is a 4 AGI deduction, we would take the Social Security, $55,410, and remember it's the employer's portion, only 6.2%, so $3,435.42. And then the Medicare, $55,410 times 1.45% is $803.45. If there had been another 0.9% here in Medicare, it would not be included in this deduction. The total deduction for AGI, $4,238.87.